Sticking to the big tech moves this year, our next guest says if those mega cap stocks keep rising without support from the average stocks, it would create a durability issue similar to the tech bubble. For technical analysis, let's bring in Todd Sohn, technical strategist at Strategas Research Partners, a Baird company. Great to have you with us.
Thanks,
We've been hearing
here
that for a long time about this durability issue that's too concentrated, and yet the march has gone on. And yesterday we saw glimmers of hope of some broadening
for the rest of the market.
The
Mag 7 as an index is 30% above its 200 moving average. That's pretty aggressive. It's not extreme like 2021 was, but it can create a summer speed bump, especially with the election cycle starting to kick out. You can get corrections during election years. So I wouldn't be surprised if you saw some profit taking, but ultimately the key to this market is the equal weight S&P 500, because when you start to get these big weights, which are so influential now in the S&P 500, without the bench, as I like to call it, you're not going to be able to sustain that. And that's when real issues come through. And so I liked what yesterday had, where you had the large cap names pause, but really good internal strength.
We had, I think, 400 of the S&P 500 stocks actually trade higher today, which was a real positive sign. Yeah. When you take a look at some of the leadership when it comes to the AI trade, it has been semiconductors. And I think what was really notable in the month of June is we saw some really interesting moves, particularly among NVIDIA and Broadcom. We saw outside reversals June 20th or so that week. And they haven't really regained. They haven't gone up to back to highs at all set on those days. Should we be more concerned given the sort of the speed bumps exhibited by some of the components?
Yeah, I think the expectations are so high. We have earnings coming up that when you start to see outside reversals like that on very high volume too, like think about
very
this.
High volume, yeah.
The 2x leveraged NVIDIA ETF is one of the most traded ETFs now. That is very uncommon, right? Usually it's your SPYs, your IWMs, right? So it's really odd to see this single stock ETF up there. So I think that you're setting yourself up for a correction. And if I was a portfolio manager, if I'm an investor, I have 10 stocks that are 40% of the S&P 500, 10 stocks that are 60% of large cap growth indices. So I want to look away. I want to look at healthcare. I want to look at financials, which as big tech has paused, those are the names that are actually starting to break out here, too. So there's a lot of opportunity away from mega cap growth.
And going to some of the sectors that showed some glimmers of life yesterday, REITs had a very good day yesterday. Home builders had on this pullback in rates, the expectation that the Fed will actually start cutting decisively in September. Are those moves, do you think, sustainable? How do the charts look?
The REITs are really interesting to me, along with, a lot of those are in the small cap space. The small cap Russell 2000 has gone 670 trading days without a new all-time high. That's the third longest streak in history, only following the tech bubble and the financial crisis. So the bar for stuff like real estate, healthcare, small caps in general to work, I think is really, really low, right? And tech has worked for good reason, but I like this idea of that broadening out, of looking away to the stuff that has not worked really in 2 years. The equal weight S&P 500, give or take a few days, has been basically sideways since January of 2022. So timeliness is there. And the sentiment environment, too, is really supportive, I think. It's nowhere near the euphoria we saw 3 years ago.
We were talking about Tesla just before we came to you. 11-session winning streak, I think it was at 40% or so in that, in this sort of run-up, most recent run-up that it's had. Is there any concern about the velocity of this move? I
wouldn't expect anything less from a Tesla type stock, right? The volatility there is immense. My issue with Tesla is it's the sloppiest of the Mag 7, right? Apple, NVIDIA, Google, Meta, those are all defined uptrends. Yes, they can correct from extended positions. Tesla's the hardest call because there is no trend there. You've had these volatile moves, 40% down, 40% up. I don't know if I have a great call there. I suspect the sentiment will get worse, right? It was pretty bad a few weeks ago. You still have about 13 or 14 sell ratings. That's the most of any stock, large cap stock out there. So yeah, low bar, but you're trendless. It's difficult to make a move on Tesla. I'd rather play through options.
And also in the category of making run-ups into earnings, banks. So what do you see in the charts there?
I like how the big banks have acted. JP Morgan's still strong. Citi and Bank of America have pushed to new highs. The regionals can be tricky due to rates, but they've had a really nice week, and that goes along with small caps because of how influential they are. So, again, I don't see many flows to financial-type ETFs either. I think the bar is really low for these stocks to work. Pass that along to even the asset managers. Goldman and Morgan Stanley are breaking out. So this is more evidence that there is a want to broaden out besides these influential stocks. I think there's a lot of opportunity to diversify away from the 10 largest weights.
So forced to choose equal weight over S&P at this point?
I think equal weight is the move for the next few months, perhaps the back half of the year. Let's call it that, 2H 2024.